Hey, good morning, everybody. I hope that the market has treated you well and that you've been properly positioned. We've had some big moves on the downside, and I'm sure Dan has kept you on the right side of the action. I know his trading has really improved greatly. You've had a good year so far, haven't you? Well, while Dan is resetting, I guess I can carry the conversation. So we've got a pretty big overnight move right now. We had the jobs report that came out. I'm just going to wait for Dan to tell me when he's in. But we've got this drift lower after yesterday's big sell-off. So these are the after-hours sessions. We've had additional countries that have retaliated with their own tariffs. We had the jobs report come out this morning, about 223K, I believe. Hourly wages up 0.3%. 0.3% is not a bad number. Labor, largest input cost for manufacturers. So it is inflationary when it's at 0.4, 0.5, 0.6%. So that was a little bit of decent news. So decent jobs, lower wage inflation, but the market doesn't care about the jobs report because it's backwards looking. What it cares about is the big hurt that it sees coming over the course of the next few months because of the tariff hikes and the potential for a trade war. So whatever little bounce we got out of the market this morning, I'm going to ignore because the focus for asset managers is risk off, and that's why we've seen this dramatic decline in the market. So that was the breakdown yesterday below horizontal support. You can see how this is a wimpy little bounce right in here. That rejection off the 200-day moving average set us up for a really nice entry for short positions on a swing basis. I've been swing trading on the short side. I've been day trading on the short side. So one thing I would like to mention to all of you is that I know most of you here are day traders. It's really important to be able to swing trade as well because you're going to catch 200-point overnight moves like this if you are adept at reading price action. That's a huge move, and there's a good chance that the market kind of sits and digests the news for the first half an hour, 45 minutes today. So still kind of waiting for Daniel to come online.
Yeah, can you can hear me, Pete, right?
I can.
Okay, chat, can you hear me? I don't know what's going on because everything in OBS looks good. I got levels. So chat, let me know if you can hear me talk. We can hear you now? Okay. All right. Well, good. Thanks, Pete, for carrying the conversation while I was having fun dealing with tech issues. So that sounds good.
Technology.
Yeah, so Pete mentioned swing trading. I've been in puts since last Thursday. So we'll pull up that position here. Here we go. So Q puts, they are May expiries, 475 strike. Bottom for 1130. They're at $38 right now. And I already exited a quarter of the position yesterday. So I'm up, well, pretty nicely. Can't really complain about that. And I will be looking to exit. We're right around where I wanted to hop out of another quarter. You can see I have an alert on Thinkorswim that doesn't trigger in after hours. But we did bounce there before since I couldn't get out of the position because they are Q puts. So I have to wait till market open. And now I kind of just want to wait and see if we revisit this area of 435 and on below, and then maybe I'll look to take another quarter of the position off. What do you think, Pete? Someone like me, I'll be selfish here and ask your input here.
Yeah, and I think that's it's going to be a good move. It's going to be prudent. What you want to do into these big market drops, especially if you're long put premium, is you want to, even before the low, is when you get these big air pockets, you definitely want to start taking some profits on it because the option implied volatilities for those options is exploding. And even if you don't pick the absolute bottom, let's say that the market continues to fall, but it does so at a very gradual pace, what you're going to see is you're going to start seeing some of those option implied volatilities collapse. So even though the market has moved your way, once that implied volatility starts to decline and decay, then you're actually going to be still receiving the highest price for those options just because of the option IV.
That's a good point, and that's what makes options so fun, isn't it?
It is, but it's also a reason why you don't want to sell calls. That'll be a conversation for another time, but that would be assuming you're close to a market top, but that's when option implied volatilities are very low and you're not properly rewarded for selling those naked.
So Pete, I pulled up this chart that you marked up. It's a capitulation low. Do you want to talk about that real quick?
Yeah, absolutely. So what I'm going to first have most of you do is all of you is go back to your SPY chart, February 24th, 2022. Okay, February 24th, 2022. Why is that important? It's important because that was the first leg of the bear market in 2022, which is kind of where we're at right now. And you'll see that we had this sell-off initially and then a bounce up to the 100-day moving average. And then we had another subsequent drop that culminated on February 24th. The reason this is important is because you'll see that air pocket low, and the open from February 24th was 411 and the close was 428. So you had about a 200-point S&P rally in one day. And on the opening, everything looked like the world was going to hell in a handbasket. So I am looking for an overreaction right now, a big move lower. And what you'll see, and it has to be this exact pattern, okay? It's really important. We need to see that consistent drip, drip, drip lower. And that's going to be a sign that buyers are there. They're just not very aggressive. And eventually they throw in the towel. And then you get this air pocket low. You'll get a very long red candle. Well, once that low is in, you see an immediate bounce. And sometimes you'll have a bearish hammer off of that low, meaning that you go even lower. And then all of a sudden, out of nowhere, buyers come in. They've been waiting in the wings. This is their moment. It's gone far enough. And they fuel that move all the way back up and above the opening for that 5-minute bar. And that's what results in that bullish hammer. Now, you could also just go right to the second candle off of that low, which is a long, almost bullish engulfing candle. That also is a way that the low can culminate. But the point is that you get above the open of that long red candle initially established the low of the day. And then you never look back. Every candle has very little overlap. They start stacking immediately. And the immediacy is important when we are judging where the market's going to be moving. We can do that when there is a sense of urgency by one side or the other. And in this particular case, we're looking for that sense of urgency on the part of buyers. They don't feel like they'll ever be able to buy this well again. And that's what causes those consecutive green candles stacked, not overlapping, stacked. And you might get a little red bar in there at some point, and that's okay because we want to see it instantly reversed by the next candle that serves as confirmation, and you add on that move. Then you start getting into the gap. You got another opportunity to add. By the close of business that day, you're going to be back to even. So in a case like today, we're getting this drip lower. You can see this nice long red candle here. Would I short right now? For me personally, the risk of a snapback rally is way too high. So no, I wouldn't touch this with a 10-foot pole after a drop like this already. I'm just going to let it come in, and I'm waiting for my setup. So,
And real quick, Pete, when you talk about the capitulation low, people are going to say, "Oh, okay, so you go long on the engulfing candle, or you're talking about really more exiting your short positions, right? You're not if you're a day trader, are you ever looking at trying to scalp the long side after something like that, or is that too
oh
risky?
yeah, oh yeah, and I will if I see it today. I definitely will be getting long. So,
Awesome. Okay.
yeah, and first and foremost, you have to keep your eye on the ball. Longer term, this is a bearish market. I can't say it enough, so I'll say it a bunch of times. I'm bearish, I'm bearish, I'm bearish, I'm bearish. Okay, so this is a temporary move. And if you're a novice trader, you do not want to trade against that bearish trend. So you would simply take profits on that capitulation low on your short positions. You would step aside and take a break. Now, if you're a professional trader, you're going to actually be trading that, but I wouldn't trade until I get that bullish engulfing candle and until we blow through the high from that long red candle that establishes the low. And here's the key: you must have follow through immediately. Once you start getting three long green candles consecutively, you've confirmed that buyers are aggressive. They're in there snapping it up. They want in. And that's when you can start getting behind the move and you scale in. So you only take an initial starter, but then you start scaling in on confirmation. Like I had mentioned, you get a red bar in there that is instantly erased by a green bar. Then you got your confirmation you can add there. You can add once you go into the gap. That's how you would trade it. Yeah,
Terrific.
for sure. I've made some of the most money ever trading capitulation lows. Now, there are some capitulation lows that are happening on a longer term chart where this is like an absolute market capitulation, like in 2009 off of the financial crash. Now, that capitulation low fueled the market for about a year and a half before it even looked back. So I'm not looking for that. I'm just looking for an oversold bounce here. And then for those of you who did not trade the bounce, you're wisely sidelined. Now you're just waiting for that bounce to run out of steam so that you can re-enter your short position. So that really should be the mindset for the majority of you.
Awesome. Yeah, that's great. Great to have that guidance there, Pete. I think a lot of people really appreciate that. All right. So coming in, we're down however many percent. I don't have my motive wave crashed on me, so but we are nearing the 18,000 level for another test here. We offered a little bit of support in pre-market trading. And so, is there anything that would entice you to the short side for a scalp today, Pete?
There would have been early on, actually. I would have traded a bounce that was related to the jobs report.
Yeah.
Hey, everybody, there's jobs. This is great. Let's rally this market on the open. Let's try and bounce. And that would have interested me because if that bounce was not able to fill more than half of the gap down that we had overnight, and it started to lose its steam and it started to roll over, that would be an excellent opportunity to get into a short position.
It's funny looking back at the jobs candle. It kind of blends in with the kind of movement we've been having this morning. It's like what
Yeah.
101 points on Nasdaq. It's actually pretty sizable, but again, it's just in these conditions, it's just oh, you can't hear me. Oh, fun. Well, I don't know about.
Well, I can hear Dan, so we're still working through technical
Oh, we
difficulties.
can.
I'll wait.
Oh, they can hear me. Okay. Well, someone lied.
Oh, okay,
That's all.
good.
Maybe they were lagging, but okay, we're good. We're good.
So right now we've got the overnight low from the overnight session was at 516 basis SPY. So on an equivalent that support's going to hold. That's where I would expect to see support. Is that kind of what you're looking at?
Sorry, you know what? I tried to relaunch my platform, and I think I froze you out because my computer is just struggling hard this morning. Could you say that one more time about where you're looking for support?
Yes, I was just mentioning that the overnight support basis SPY was around 516, and it's about 40 S&P points lower than where we are currently. Are you kind of looking for a test of that with possible
Exactly.
support there?
Yeah, I would love to maybe exit part of my swing puts around there, just to de-risk a little bit, capture some of that profit because I'm up about almost 4x what I put in. So definitely don't want any. A snapback rally would make me a little nervous to watch that start to evaporate on me. So
Sweet.
yeah, so and I would say, Pete, I would thank you. Well, I do want to thank you for your guidance this year. I've told other people this. Like you have a lot of you do like a global analysis. You take in information from so many different sources, and well, I'm just kind of the beneficiary, one of the beneficiaries of that. And so I've only done two Q swings, swing puts this year, and they have been monsters. And I would say they are led, like the timing of those entries have been led by your analysis. So thank you for that.
Hey, you know what? Pointed the way for you and you had to pull the trigger. So congratulations to you because you still have to get behind the trade and you
Yeah,
still have
yeah,
to do the trade. And for anyone watching here, don't follow. You got to learn. You have to learn how to do this. That's what I'm trying to do is I'm trying to teach as many people as I possibly can. And if you are going to follow somebody, for God's sake, do your due diligence. Go back and look at their previous picks. Get as much history as you possibly can. Make sure that they actually know what the hell they're talking about because there's a
yeah.
lot of
And
crap out
for
there.
for whatever reason, just copy trading someone else's just does not work. You get, like Pete said, you gotta learn how to trade on your own, and yeah, that's important. You gotta be the one to pull the trigger, and you gotta know why you're pulling the trigger and what you're gonna do if it goes against you, where you're gonna get out if it goes in your way or goes your way. So you really have to. That's just something that you have to develop on your own, for sure. We're about 30 points from 18K right now on Nasdaq.
Yeah, so I tend to start looking ahead too. I do want to always have context on what is happening, not just with the S&P 500, but with global markets and the news that's going to be coming out. And especially when I'm swing trading, carrying some overnight positions, I want to see where there might be potential speed bumps ahead. So, today's news was normally the jobs report was going to be a big event. And that's why I decided to join Dan this morning because I thought we might have decent trading setup. But after the moves that we've seen overnight and yesterday, it's like, okay, well, error on
Mm-hmm.
the side of caution here. Uh, so normally a jobs report is going to be just a phenomenal event to trade, and you're going to get lots of movement that's conducive to trading S&P 500.
Yeah, it is harder to trade when we've already had like large movements pre-market. I find in the overnight session, and then you're kind of you don't want to get caught off sides either way, and so I think maybe it induces a little bit more patience, which is not a bad thing. And also with this kind of movement, sizing down from your normal position sizes may be a good idea as well.
Yep. So here's kind of what I do every day is I go through, I get all my news, I take a look at what's happening overnight in the overnight markets, and I assess if it was mixed, if there was a bias one way or the other. I take a look at the overnight move in the S&P 500. I get my bearings in terms of, okay, this is where we're opening relative to the longer term picture. And then I start formulating game plans and scenarios. Now, the scenario analysis that I go through is very much like playing chess, and you are evaluating what your opponent is doing. You can see what they're doing, and you're anticipating, well, they could move this way, and if they move this way, then I'm going to respond with this, or they could move like this, and then I'll respond with this. So you're going through these scenarios, and then you're setting up which scenarios would be most likely, which scenarios would benefit you the most. And unfortunately, we don't always get what we want. So what I would like this morning is I'd like that capitulation low to sell off and to sell off. That would be my best setup. Another possibility would have been a weak, wimpy bounce into that, after that jobs report, that would have given me an opportunity to enter short positions. So if I don't get what I want, then I'm just watching to see what actually does play out. And if you get a big gap down like this, and I look at where there could be potential pain for traders, it would be on a couple of red candles like this, and then a nice move into the gap, because that would catch anybody that was the bear speculators that came in early, FOMO Joe, as I like to call him. He comes in and he's like, oh, this thing's going to hell in a handbasket. And so he shorts right out of the gate, and then he's going to have a world of hurt put on him if we get back into this gap, because these moves are like, we're seeing 5-minute bars that are like 20 S&P points.
They're monsters, yeah.
Those are they're painful.
Well, 18,000 on NASDAQ held there on the retest. I'm a little interested in exiting maybe a couple more of my contracts, because we did. I mean, I marked this out yesterday on stream. Was like the red line on my chart below. These are like the points to scale out that I wanted to take, and we did tap that. So I think I may exit 2 more contracts now. Gotta lock in some of this. So I'm gonna go ahead and do that. I'll have 4 left. I'll have 50% of my position still on.
Nice trade.
Yeah, pretty
really nice trade.
One of my better ones for sure. I'm gonna see if I can get a little bit more out of it here.
Well, the advantage of scaling out is that you're taking profits, but you still have the position on, so you're able to let the position continue to run your way, and you're less emotional about it because you've already locked in some gains.
And you're staying really out of trouble after the fact, because you still have a piece on, right? So you're not like, oh, I'm missing out on more profits. You're still participating in any more downside, but you feel more comfortable because you've already taken some profit. And at this point, it's definitely free trade for me for the remaining 50%. So I'm sitting very comfortably at this point.
And so if you evaluate what the early information has given us so far, and we're 20 minutes into trading, and the knowledge that you get in the first 30 to 45 minutes is well worth the price paid. What I mean by that is that you're able to assess how aggressive buyers or sellers are. And again, our ability to predict future price movement is based on how motivated one side or the other is. And when they're super motivated, then our odds of predicting that price movement go way up. Well, what can we glean out of the information in the first 20 minutes? Not a whole lot. What I can glean is that both sides are active, but neither side has control, because we're seeing a couple of long red candles and a couple of green candles, and there's really no net change, and we're sitting right on VWAP. So what would I want to see right now, and would I chase a move into the gap? I'd prefer to see one more probe lower. I'd like to see a long red candle that reverses into a bullish hammer, and then I'd like to fly into the gap on a long green bar, and then I'd like to hold that long green bar, and then I would be tempted to start considering a long position, just a starter.
All right, let's change gears a little bit. We have a question from chat. Question is, with NASDAQ next year announcing 24-hour markets, please tell us all the positives and negatives from this, from your opinion, or at least some of the positives and negatives. Any thoughts?
The majority of the trading is going to take place as it always has during U.S. hours. So there's, uh, the activity is going to be concentrated to when U.S. institutions are open, and it's not going to have that much of an impact. People will be able to trade 24/7, but the volume is still going to be taking place when our normal markets are open. Why? How can I be so confident? That's when companies release their announcements. Okay. That's when you're going to have earnings announcements. That's when you're going to have corporate news coming out. And that's when the volume is going to be, it's going to be concentrated. Right now, you've got S&P 500 and NASDAQ trading 24/7. Are we seeing huge overnight volume? No. So it's going to stay during our normal trading hours.
Yeah, makes
That's
sense to
just
me
my
too.
take on it.
It's a good point about like the futures markets. Yeah, they're open like 23 hours a day, and yeah, like you said, there's plenty of times where it's just not really doing anything because, I mean, even traders want to time away from the charts. Like, I don't know, it's nice to step away.
Back when I worked on the trading floor, the guys that worked in the grain room were always like really old timers. You were talking corn and we're talking beans and all sorts of commodity products like that. And they only were open for about 4 hours, and they'd take crap from every other pit because it's like, oh, you guys got it so easy. And they're like, no, we just happen to get all our business done in 4 hours. So it's kind of the same deal where they get just as much volume done in a shorter period of time, and that's when everybody happens to be
So
active in those
back then, like,
markets.
how did people end up in the pits they ended up in? Is it just kind of happenstance they were able to get a job as a clerk or a runner for someone, and then they just kind of started to learn it and got into it? Or was there any other, were you just like, oh, I'm interested in bonds, so let me get in the bond pit? Or like, how did that come about?
Yeah, it was pretty hard
Yeah.
to find work there. You'd start out as a runner, and then you'd phone clerk, and then eventually you would make enough contacts to find somebody who would nominate you or back you, and they put you through a training program. You had to adhere to their particular system and their trading methodologies. And then it was just a matter of establishing your track record and your performance. If you had enough capital, you could go in. There was a small exchange. The membership fees were very small. It was called the Mid-Am, and it was smaller, like mini contracts. And that's where a lot of traders would go to kind of get their feel and uh, earn their keep, so to speak. And then if they were good, then they would be able to advance into some of the more liquid,
And did you have to
bigger
pass some like
markets.
series exams to be able to be in the pits? Yeah.
No,
Okay.
you just had to have a wallet or a
Okay.
backer, somebody with money, and then you could go in and. But for the most part, just based on the membership fees and everything else, and there's a whole hierarchy with where
Hmm.
you stood in the crowd and how proximate you would be to large order flow, and you're always going to stand in
Yeah.
the worst area. And I mean, it was like a gladiator battle. I mean, I'll tell you, I've never ever seen anything like it.
Yeah.
Nothing compares. It's definitely not like Trading
Uh huh.
Places or
Sure.
any movie.
Things are much calmer these days. Just people hiding behind their monitors, a wall of monitors and keyboards.
You know what? It's calmer, but there's all this internal kind of emotion and strife that you don't get to see. Like if you went down to the
Hmm.
observation area of the Chicago Board of Trade, you would watch these guys, ready to pop a blood vessel in the middle of their forehead, screaming as loud as they could, and just these waves of people pushing each other. And now the emotion is internalized. It's like every individual trader
Hmm.
doesn't display that. And that's a lot of what these guys would feed off of. So it wasn't just volume in terms of quantity and who was buying and who was selling. They would also feed off of the emotion in the trading crowd. And I'm talking about volume in terms of decibels. And when I talk about our ability to predict price movement, it comes when there is a sense of urgency. And when you could feel that sense of urgency in the trading crowd, and a lot of those guys that were able to make money and be successful down there weren't able to transfer that off floor. So they weren't able to pick that
There's
information
a
up
good
from
documentary on
the screen.
YouTube. Is it called The Pit, or what is it called? The Floor? I forget what it's called. But it kind of talks about that transition away from the pit and to digital trading, and how some people could not adapt. And it's a really interesting watch. If anyone knows the title, it's something along those lines.
I've got a buy
On
order
ES?
loaded.
Oh, interesting.
Yeah. Just waiting to see. Now, I'm not going to be FOMO Joe, and I'm not going to stick my head in that noose. I need to see us get into the gap. I need to see us hold that move into the gap. I do not want to see it smack down, because that would be a sign that sellers are still around. I want to see us get into the gap. I want to see us hold the gap. If we hold it for 2 bars or so, then I'll take a starter position on.
All right.
This is a nice bounce. This is a nice little move here.
Chat says the documentary is called Floored. That's right, Floored. It's a good one. So Pete's looking for longs, and that could be. And he trades ES mostly when he's trading futures, right, Pete? Yeah.
Yeah, I'm an S&P trader. I enjoy trading him. I like the liquidity. I've gotten very familiar with the price movement, and I know that Daniel likes to trade NQ. So it's a little bit personal preference, but I will say that there are some days when you really want to favor SPY or ES over QQQ or NQ, just because of relative strength. So there will be times when, the NASDAQ is moving. It's weaker relative to the S&P 500. Well, then you'd want to trade NQ on the downside when you're bearish, and you'd want to trade ES on the upside.
We've definitely had those instances with those little divergences, and the ones leading the way, and that makes sense to me. I'm getting a lag in my data here. There's a little gap on the 1 minute here from the data provider. We're coming into 18,200 on NASDAQ.
The trading software that we use to record to, I mean, it slows everything down. It's pretty frustrating to try and do these.
It causes a lot of distractions that you may not want as a trader when you're. Doing live streaming is way harder than, I don't know. Some of the veteran streamers make everything look so easy, and there's a lot going on behind the scenes that makes it more challenging. It does slow the computer down and everything like that.
So I've got a proprietary indicator that I've developed. It's called 10P. I think Dan's probably mentioned it before. It's currently on a bearish cross right here. What I'd like to see happen is I'd like to see us go through what I call a bearish cycle. Typically, when we get a cross like this, it's going to tell us that, yes, there is a chance for the market to move lower, chance for the market to drop. If that cycle runs, and it might take 20 minutes, a half an hour. There's no uniform length of time that it takes. But in any event, if we get through this bearish cycle in the next 20, 30 minutes, what that's going to also tell me is that the market is starting to find some support here. They are not able to knock it down. And then if I get a bullish cross, say in 20, 30 minutes, and I start to see some nice positive green candles in here, and it looks like we're heading into the gap, then I will feel more confident taking a long position. But until then, I'm just going to wait.
Let me ask you a question about the 1OP here. When it does start to cross on a peak, and then like the red line, the faster line, starts ticking back up after the cross, does that is that indicating maybe a delay in the bearish cycle really getting going, or is that something we shouldn't overinterpret?
Yeah, it does. And what you'll oftentimes see that is when you get a really big spike, and you'll see the fast line move below the slow line, but the slow line, in this case, the blue line, is still moving higher. So I always like to make sure that that blue line, the slow line, has really flattened out. Because if it hasn't, that's when you start getting some of those crosses back up over it. So yes, and the way that I look at it is, if I get a cross down that would be bearish, and then it crosses back above, and then it crosses back below, is the market hitting a resistance level? If it is, good, because this is just confirming that, yeah, the next move is probably going to be lower. A lot of nuances to the indicator. It's like nothing else you've ever seen. I'm telling you, people, oh, I figured it out. Again, you did. Good. Show me. And they'll show me, I don't know, MACD or something else. And I'm like, oh, yeah, it correlated right there. But look at all the other 90% of the time, it didn't correlate, not even at all. And it doesn't even correlate with the market sometimes. And we get what we call divergences, which are actually very powerful.
It's a very interesting indicator. I've been fascinated with it. I've been using it for years because, like you said, it's not like anything else. You're just like, there's a little secret sauce to it that I don't know about, and but I find it to be very helpful. I will say lately I haven't relied on it as much. I think price action is really, price action always leads the way, but it's just been so. The moves have been so. A lot of them have been fast and strong and volatile. So, but it is nice when I see something and I see that the 1OP is also adding a little confluence to my thesis. I always feel more confident in that position.
I agree with price action. Price is truth. Price action. If you learn how to read price action, there's no holy grail out there. And 1OP is not the holy grail. It takes some interpretation, but when it agrees, or let's say you're in a long position and the market's chugging higher and everything looks fantastic, and then you get a bearish cross, it's like, where did that come from? And then all of a sudden you start to see the momentum in the market wane, and you're like, holy crap, this thing is calling for a short-term top. I'm going to take gains. And then sure enough, you start seeing some red candles. It's like, man, that thing nailed it before the move even took place.
It's really helpful on either reversals or timing exits on your trade too. So very cool. And people can check that out. It's you can do a completely free 2-week trial, like not to shill it or anything. Like, you don't even need a credit card. But I've been using it for years, and I think it's awesome to check out. So you can also, if you click the link in chat, you can also go to Pete's website there and learn more about. There's the chat room with pro traders. It's a very serious chat room. It's not like our live stream chat with a bunch of goofballs. I'm just kidding. But no, it's a very good community there, and Pete has a great system. That's, if you're not unfamiliar, it's more of equities based, and you're looking for relative strength or relative weakness, that to the overall market SPY. And we have a bunch of futures traders in chat, but there is edge in the equities when you can have, especially relative strength or weakness. And sometimes that edge is just, you don't have enough edge trading the overall like NQ or ES. And so it's really nice to be able to flip over and have more things to trade when the overall market's not doing what you want.
There's an unbelievable edge to not trading futures. Personally, I find that about 20% of the days are conducive to trading futures. It's about how often I would focus solely on trading futures, and those are your trend days, and those are your days when you get lots of movement. This is not one of them, by the way. We just sit and spin down here. We dropped, and now we're just sitting here. So, but anyway, days like yesterday are fantastic trading days. You're going to have those trend days, and you're not in scalping. You're really just taking a longer term position, and you're adding to that position, and then you're exiting near the close. Yeah, I absolutely trade futures on those days. But if you can imagine the ultimate trading chart that you would have for the S&P 500, well, there are 3,000 S&P 500 out there, and they're called stocks, and we can look for those perfect patterns, and we can trade those perfect patterns. And if I went through my routine right now, I could show you a stock that's screaming higher that would be a definite buy if I felt the market was going higher, and I have the ability to cheat, so to speak. I can be a little bit early on it, and if the market heads in the opposite direction, the stock has got so much institutional buying in it that provides me with a cushion, a buffer to be wrong on the position, and I can exit for little or no loss. Sometimes I'll even make money on the trade, even if I'm on the wrong side of the market. So it's definitely an edge you should explore.
I'm looking forward to doing that a little bit more. So what I want to do at the beginning of this year, I have my Thinkorswim account. I had taken money out, and I was well under PDT. It was a $5,800 account, and then I took 2 swing trades, and now I'm at 33,000 realized. So now, I wanted to be above PDT, and so now, assuming I can get out of the other 4 contracts with plenty of profit, I do look forward to diving back in. I used to trade options when I was starting out, and some of just the shares, and so I look forward to doing that a little bit more because, the futures can be very, very brutal and very, very challenging. Something I do want to mention, we talked about the 10P. We do have the blue line. Not only did it flatten out, it's heading down, and the red line is following suit, of course. And so let's see now if we do get this move lower, maybe this capitulation that Pete has talked about, and see if it does get gobbled up. And we'll have to watch and see. We're through 18,100 right now. 18,000 has provided a bounce on NASDAQ earlier, and so let's see if that gives way.
So while we're waiting, you can bring up a chart of Microsoft, and that would be an example of relative strength. So let's say that the market were looking like it's a good buy and that there's support, but I'm not quite sure after a big market sell-off like this, maybe we poke down at support once more. You can see how Microsoft sold off with the market initially and how it bounced instantly. That is on heavy, heavy volume, and that is a sign that buyers are interested in it because they're not looking at what Microsoft is doing in the next 20 minutes. These guys are out there buying it for the next year or two, and they see that as a good entry point, and that's why you're seeing Microsoft move higher against an overall weak market, and that's the edge. And if we get a drop here, we're going to look at Microsoft in 15, 20 minutes, and you're going to see that, hey, you know what? The market fell apart, and you would have been wrong on the market. But, man, you know what? Microsoft held in there really well, and that would have been a really decent trade. And if by chance the market does run higher, you're going to see it scream.
Yeah, so basically, what you're doing on a regular basis is you're scanning for these stocks with relative strength or weakness, and so then you're kind of developing a game plan, right? So when you see what you want out of SPY, you already have maybe a handful of stocks with relative strength that you want to then look at and see if it's going to be a good long. That when the market bounces, it's really going to start ripping because it already has that relative strength.
Yes, and as with all of our trades, it's all probability based. It's all odds based. Present me with an opportunity where I have limited downside and huge upside potential. That's what I'm looking for. And so, if you were suspecting that the market was going to go higher and you got into Microsoft, your downside is limited because there are buyers there. We've already seen that earlier today, and they're not going to just run away. And so the market heads lower. I scratch the trade on Microsoft, but if I were trading futures and I were wrong on that call, I am going to lose money. There's no two ways about it. So
just to reiterate, he's already said it twice, but just to reiterate, if you're playing Microsoft to the long side, and the market instead does not actually get the good bounce, and we sell off more, Microsoft is going to, in most cases, it's going to still have some of that resilience. And so when you see the market actually starting to head lower, you can get out of your Microsoft position for a scratch, maybe break even. It gives you more wiggle room to get out without maybe a full size stop out that you'd have on ES.
Correct. Yep. And if you think about who's trading ES, it's the largest institutions in the world. And when you start getting into some of these stocks, you're a small trader. I'm a small trader. We're all peanuts compared to institutions. Why do we need to compete in their arena? Why don't we compete in other arenas where we're quick and nimble and where we have an edge? So they won't even consider some of the stock trades that we would look at. But hey, if you're trading 3, 4, 5,000 shares, you're making great money. It's not enough to wet their whistle, and they're not in there competing with.
You're picking up pennies in front of a steamroller. But these are pennies we can live off of.
Pennies for the institution. Yeah, they won't even look at that. They're like, nah. Where for us, if you can make 3, 4, 5 grand on a stock trade, thank you very much.
We're sitting at home clicking buttons and making money. It doesn't get any better than that.
All right, so yeah, we're getting a breakdown and a new low of the day, and we stepped down pretty well here. Are we going to drift lower? Choppy action so far. We've had some green candles in here. Neither side has really demonstrated any great interest one way or the other.
Yeah, now that we're through 18,000, it'll be interesting to see if we do get a little bit of momentum, some stacked candles, or if it is going to be more of this, a little bit more balanced down here at these lows after that pretty sharp move in the Globex trading.
So I'll say one other thing, and that is that going into the trading day, I know what I want to trade. I'm not just looking at little price movements and going, oh, it's going to fall. It's going to fall. I'm going to show. I know that I want to see this particular pattern. And if I don't get it, I won't trade. And it's okay. Sometimes that trade might not surface for 2 or 3 hours. But I'm also not looking to scalp. If I can't make, at least 10 points on a futures trade, I'm not even remotely interested in it. If I feel I've got 20 or 30 points, and especially with this market volatility, you should be able to get a 20-point move pretty easily. And so, you need to evaluate, well, what type of pattern am I going to get that's going to yield that? Well, for me personally, if I see this drip lower and we've got this herky-jerky this could be a trading channel that develops. In fact, I think that's what we're going to see a bearish trading channel with lower highs and lower lows, but the price action on the way down is going to be very herky-jerky. And those tend to culminate with a long red candle through the bottom of the lower trend line. And that's when you're going to get your capitulation, and that's when you're going to get your bounce. Now, off of that bounce and off of a deep low after selling like we've seen the last few days, oh yeah, I definitely will be in there.
So I did hop in a short here on NASDAQ on this. I like the break of 18K, a little retest there. Just looking to see if momentum will pick up here, as I mentioned, and I can take part in some of this move lower, maybe a retest of where we bounced in Globex. So I am short right now. It's going pretty good right now. About 30 points here. Someone did ask if this impending bounce, if you're offloading all of your short swing positions or holding a small percentage through the bounce.
Personally, I'm taking everything off. Yeah. I don't, and the way to trade a bearish market is that when you get these deep air pockets, you don't try and predict the exact low. You just know that when that rubber band is super, super, super stretched, that you're going to be able to put targets out there and have them come reach for you. And then you'll gradually scale out of your positions. And then you're kind of in wait and see mode. For most people, it's just wait for a bounce and wait for it to fail, and then you would re-enter short positions. For professionals, depending on how deep that sell-off is, there is an opportunity to play the bounce. And right now, I'm kind of looking for shorts to get lured in to this move lower, and I'm waiting for that capitulation low. We might not get it for an hour or two. I may be waiting for quite a while. I only know that when I get it,
Well, alert me in,
I'm
that's
gonna
for
be
sure.
ready
We'll see
for
if it looks like I'm about to get stopped out here on this one. But I did like that decent probe lower there, like what 44, 944 on Nasdaq. It is threatening my stop right now, a few points away.
Yeah, I tend to I trade less. I'm kind of a stickler for a really good entry, especially when I'm day trading futures. I think in the chat room, you'd see me take a couple of shorts over the course of the last week that I'd let move considerably against me. But
Yeah.
I added to those positions because I viewed any bounce as an opportunity to re-enter and to add to that longer term swing position. So you've got to have that conviction when you're swing trading also. That was at much higher levels as well. That's not like into a deep, deep, deep hole like this. And if you go back and look at charts historically and you start to gauge how deep some of those recent moves have been in the last year or two, and you start to compare this one to those moves, you're like, yeah, once you start getting into the 10% range in a few days, that move typically reverses hard somewhere along the line.
Definitely. Yeah, I did have a hard time. I started the swing short on Thursday, and then Monday it was up handsomely, and then but then it just started bouncing Monday, and then Tuesday I was like, okay, well I don't want it to retrace more than 50% of the bearish candle we had, and it did. It ripped and into the tariff announcement or whatever. So it was interesting. My position was actually negative $48, so about flat. Going into close on Tuesday, was it Tuesday or what was tariff day? Wednesday, Tuesday, I don't know. And then it opened up. All the action of the tariff reaction happened after the options market had closed in equities. But so it was interesting to see me go from small red to then up 100 and something percent on the open.
Oh, it was crazy too. The first move, Trump hadn't even opened his mouth, and there was an 80-point futures rally. I'm like,
yeah.
Where the hell did that come from? Somebody is looking for a big move higher, and then wham! I mean, that was like a 300-point turnaround in a matter of 10 minutes.
Yeah,
somebody got fired.
It was crazy. I was at the gym, and then I was at the gym from 2:30 to 3:30 or whatever. So then I checked the charts after I get out, and I'm like, what happened? Like it was like 1,000-point move practically. It was pretty wild.
And so the early action right now, I mean, it's telling me that buyers are present. Okay. Yeah. You might go, well, where are you getting that from? This thing is going down. It's drifting lower. Well, if sellers had complete control, you would see stacked red candles, red, 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 just like we did yesterday early on. And we're not seeing that. Compare the 5-minute chart today to the 5-minute chart yesterday. Yesterday, you see this steady drift lower in this Chinese water torture. Today, you're starting to see some green candles peppered in there, and you're seeing a much more gradual move lower. That tells you that there's some buying in there right now. And if you put in a long green candle or two in here, and I do have my buy orders loaded, so if I get what I want to see, I won't hesitate. Now, I would prefer to see a really long red candle, and then immediately the next candle, I want to see that bullish engulfing candle. I would prefer that pattern versus, gee, the market tick, tick, tick lower, and then we got one solo long green candle. I'm not going to bite on that. And incidentally, for those of you that trade futures, you should rarely make decisions on long candles. One solo long candle needs to be observed. It is a landmark. It is a reference point. How much of that candle we retrace and how we retrace it, or do we follow through? That's what matters. And we need to see what happens after that long candle. So don't ever react to just one long green or one long red candle. You need to wait to see.
That's a good point. Yeah, it can freak out maybe a newer trader when they see that, and they can maybe panic or be like, "Oh no, I'm wrong," or overly excited and saying, "Oh, I knew it," and then it gets gets erased, and you're getting maybe screwed over both ways if you put too much emphasis on it,
Exactly. So, for example, right now, let's say that we saw one long green candle up to VWAP. Ooh, there it is. There it is. That's the bounce. And, that is going to get some buyers excited. And then the very next candle is a long red candle that instantly erases that whole thing. If I see that type of pattern, it tells me that, yes, sellers are in control. That long green candle was just a program that ran to try and shake out shorts.
Mm-hmm.
And when they play whack-a-mole with it, that tells me, yes, this move, that just confirmed that sellers are in control. And then I can actually add to a position. If I didn't have this kind of jerky movement downwards, then I would. But it tells you you're on the right side, that, yes, this market's going to continue to drift lower.
Yeah. So yeah, like I said, when I shorted, I wanted to see a little bit of momentum pick up, and those stack candles, I got stopped out. But yeah, I also didn't like the probe lower and then the pretty quick buy up we had off there. But this might just require a little bit more patience than I was willing to give it.
And so for me, I'm licking my chops. Give me that long red candle. I want to see that. I give it to me, and it may take a little while to hit that air pocket, but once we get it, and we do want to see for that capitulation low that I outlined earlier in the day, we need to see that capitulation in the first 2 hours of trading. Okay. It's a Friday. Everybody's spooked. Oh my God, what's Europe going to do? What's China going to do? These tariffs are going to ruin the world. That's the mentality going into a Friday. What's going to happen over the weekend? Oh, maybe it'll get even worse. And so you want to see that real washout early in the day, and you need to have that bounce early in the day, because then the rest of the day, once you set that low, you're going to see buyers come in with both hands, and they're going to have those stacked green candles. You're going to quickly get into the gap, and then you're going to start filling the gap. And by the close, you're like, oh, that wasn't so bad. It felt like the world was coming to an end 2 hours ago. And now all of a sudden, things are looking pretty good here. Maybe that was support.
Yeah, I think it's important to emphasize Pete's mindset. Like a lot of people, I'll even include myself in this, we might get a little excited about maybe more downside. Where the market's already dropped this much, but man, obviously it can continue dropping. We've had these huge moves. So we say a long red candle, we might get excited to the short side. And meanwhile, Pete, with his years of experience, he's looking for a particular pattern that he mentioned, and he's actually looking for that capitulation, which would then result in a pretty nice snapback to the upside. So he mentions FOMO Joe. FOMO Joe is seeing a long red candle, and he's like, short, new lows. And meanwhile, Pete's sitting in the background waiting for his opportunity to strike.
If you've got a chart up, I will, reference April 2nd, which was 2 days ago on a M5 basis. We had this gap down, and then we had this steady rally the entire day. And I mentioned in the chat room, I said, okay, this is an upward sloping trading channel, and we're getting climaxy here because we're through the upper trend line. At the high of the day, that's when I posted, and I'm like, this thing's going to roll over. How do you know that? Well, because the angle of the slope is too much, too fast, and the fact that we had buyers and sellers have been very active. Both buyers and sellers have been active, and it was just a matter of time until sellers were going to come in, and that's when everything rolled over. It was an easy short for me, and I knew the pattern I was watching for.
This is Wednesday, Pete.
This would have been, yes, April 2nd, which is Wednesday. Yeah.
Like around 12:15 Central, or is that Central?
Yeah,
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 yep.
got
It
it.
was, yeah, about 12 o'clock, 12:10 Central Time.
Yeah, yeah, yeah.
If you connect the highs on the 5 minute chart, you can see how the market just poked through that upper, we call that a high plus trend line.
Hmm.
And once I saw that, I'm like, okay, this should be where the climax comes in. And then you start seeing a pretty steady decline off of that high, and then a nice series of red candles to follow through. But again, context is important. Buyers and sellers have been active. So you're cognizant of that. And this was before the tariff news
Yeah.
also. So you knew if sellers have been nervous before, they're not just going to throw the towel in before the news comes out. They're going to be positioning themselves.
And Pete, Paul and chat wanted to know what time frame you're wanting to see capitulation pattern. You're usually talking about the 5 minute for the most part, right?
Yeah, 5 minute chart. That's all I use.
Okay.
I don't use level two. I don't use 1 minute charts, a 5 minute chart, and I need to see the bar complete. Okay, so I don't guess how the candle's going to finish. I wait for it to close. Then I make my evaluation.
And what is it? Someone in chat asked earlier, what about tick charts? I know you don't look at tick charts, but do you have any thoughts about tick charts, or someone who's maybe wants validation if they use tick charts?
I just don't use them.
Yeah.
You know, it's there are so many different techniques out there. So I don't want to dismiss or discount what other people might use successfully.
Yeah.
I've found that I mean, my charts are about as plain Jane as you're ever going to see. You know, I got VWAP, I've got 1OP, and I've got volume. That's pretty much it.
It really comes down to what works for the trader, right? So if someone wants to use a tick chart, go for it. If you like footprint charts and you get an edge from looking at a footprint chart over a candlestick, go for it. Yeah, by all means, doesn't because I don't use it or Pete doesn't use it doesn't mean it's not valid. It's just it comes down to personal preference or what works for us.
So you can see this little leak lower, and this is where we have the potential here to get that air pocket going. I'm hoping for it.
Well, it does seem like that definitely has the possibility of playing out, and knowing what to look for and seeing if we get that will be a really great kind of guide to staying out of trouble. Let me pull up that chart again, that the capitulation pattern that Pete had talked about. You want to see the air pocket is where we really drop fast, and it does seem like the hell in the handbasket, like, oh my gosh, we're all doomed. And then all of a sudden buyers step in, we kind of have a bullish hammer form, and then start quickly stacking those green candles. So that's what we'll be keeping an eye on, see if we get that today. Is VWAP the same as AVWAP? No, AVWAP could be anchored to anything. VWAP is anchored to, in futures, I anchor it to the start of futures open the night before. Oftentimes it's anchored to where equities open up. But AVWAP could be anchored to, well, Pete, you've more recently added AVWAP Q, is that correct? I
have. And I
that's
anchored
based off
that to triple
quarter.
witching, and I
Okay.
found it to be very, very effective on a daily basis. I had to give a shout out to Brian Shannon. Brian Shannon's written a good book on VWAP, and he's really spent most of his career studying the price behavior around it. And for any technical indicator that you use, there has to be either a lot of people following it and they can see it visually on their charts, and then it becomes a self-fulfilling prophecy.
Yeah.
Or in the case of VWAP or AVWAP, it's a matter of institutions acting on that particular price point. So with AVWAP, a lot of large institutions will take their orders and they'll hand it off to a company like Citadel. They're an executing broker, and they will honor VWAP for the fill during the course of the day. And so for that reason alone, it has lots of relevance. And I feel that you've got asset managers adjusting their portfolio and adjusting their risk and their allocations at the end of the quarter. And that's why it makes sense for me to anchor it to triple witching, because that's when I feel they're going to be handing those orders off to the likes of a Citadel and saying, you got a week to execute this. Here's the total dollar amount that I need you to execute, and I'm expecting you to honor VWAP. So a VWAP. So it's not even just anchored to today's VWAP. It's actually anchored over, let's say, a week or a 2-week time period.
Okay. And so when you anchor yours to, you said triple witching, is that the close from that Friday that it's anchored to?
Yes.
Okay, cool. Well, here we go. Looks like we could be revisiting the lows from pre-market. NASDAQ lows are 17,820, 3/4. And we're now just, 80 points away, which is nothing in this kind of market. All right, now a little bounce off 17,900. Unfortunately, I was a little early on the short. I shorted after a little retest of 18K. I hopped in there. I liked it. I stand by that trade. But we did have a greater pullback there, all the way up to the 70s, and then we got the move lower. So not a win for me, but something I have no problem with taking a loss on that.
I've got Anthony is asking me that with the added volatility in the market, would I shift to a M15 chart versus an M5 chart? Now I'm going to continue to use an M5 chart because I want to see those 3 stacked green candles versus just one long M15 bar. So I want that granularity, and I feel like a 5-minute basis, I'm not getting too granular with it like I would be on a 1-minute basis. But I want to get in the trade, and I feel like a 15-minute chart, I'm waiting too long because I'll already will have wanted to put on a starter long position in there, maybe on the second long green candle. So I don't act on one long green candle. I need that second one for confirmation of follow through.
What number do I VWAP at? Yuri, my VWAP's around 239. 237, I think, is the number from TradingView. So around the 18,237. All right, here we go. Now 20 points under the 900 level here on NASDAQ. I may consider taking trimming my swing short here as well. If we do get that snap back, this is feels very extended to the downside here. And I'm very pleased with the profit, over 4x on the position. So I may look to trim here at the lows.
What many traders will do and what they'll lament about is they'll look at a chart like this and they'll go, oh my God, here we are an hour into trading. I missed the move. Poor me. I should have gotten short. Oh, well, this thing's just going to keep going lower, so I guess I'll just short it here. Mm-hmm. And that's not the way that you need to look at this. I mean, you are in control twice during the course of a trade. One is just before you click the button, and the other one is when you are out of the position. The rest of the time, the market is in control, and you should not relinquish that control. Okay, you should wait for your setup, and not being disciplined and not being patient is one of the biggest mistakes that traders make. And so if I would have joined this trade, let's say on the new low of the day, okay, so that was about 5 or 6 bars ago. Now we know that, yeah, it was tick, 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 tick lower, but we didn't have any evidence that that was going to be the pattern that we were going to see until it actually unfolded. We could have just as easily had a long green candle that would have gone right into the gap, and you would have had a 40-point S&P loser just like that. So no, it wasn't an easy decision, and no, you didn't know the market was going to be ticking lower. And these these are tiny bodied small candles. So I think that we're going to hit that long red candle or two very shortly, and then we'll wait and we'll see what happens after that. But I'm only interested in the pattern that I want to trade. And I will tell you, I can trade one time a day and make money, more money than pretty much any other trader, because when I get my pattern, I'm not just going to trade 1x. That'll be my starter, but I'll probably add 2 and 3 and 4x because I've got exactly the setup that I want, and I'm going to make a freaking killing on it versus in and out, scalping in, scalping out.
You're wasting more mental capital doing that as well. And not to mention, we don't commissions negligible maybe, but it's way more mental capital trying to do these hyper scalping when you could just be more confident. Maybe even a higher time frame would help you do so, and then you can kind of just sit in the position, let it work, and you're not in and out all day long. So I noticed ES did sweep the lows from pre-market. NASDAQ not yet. So let's see if we can get that push lower there on NAS.
Yep, and that was kind of what we're watching for. We thought that it had a chance to go down and it test that low, and so now we'll see what happens there.
Yeah.
But for me, I'm looking for that long red candle. And if you tick down enough, and we've got probably we're an hour in. If we get through another hour, and we should see that long red candle and that capitulation and that bullish engulfing candle, and then we still have, say, 4 or 5 hours to snap back, rally, and even to get above this open and fill in this gap. I know it seems unimaginable that the market would do that. How could it possibly do that after you've got such awful news, such horrible news? Well, that's the programs and the institutions come in, and they know also when one side or the other is vulnerable. And when you get a tick, tick, tick lower like this, you're going to have plenty of bearish speculators who have now joined the party. And those are weak hands that can easily be flushed out.
All great points. And a couple of questions in chat. Someone asked limit down on NASDAQ. We're not close to limit down. If you look here, -4, 4.25, -7 would be limit down. But if you are trading like TOPSTEP or some of the funding firms, a lot of times, we talked about this yesterday a lot, when it gets to -5%, they don't allow trading within the 2% of the limit down. So watch the percentage change, and if it gets close to -5, you have to stop trading on those platforms. And then Pete, what was your first year trading futures as Parshav?
When was my first year trading futures?
Yeah, and maybe what was it like?
When I started trading, I had plenty of industry experience. So I had built a tremendous business in option execution on the trading floors for large institutions and for retail traders. And I was a senior vice president for a large brokerage firm. And I just decided after 9/11 that I wanted to pursue my dream of trading. And so when I started out, I knew what the risks were. I knew how difficult it was going to be, but I also felt like I had an upper hand that most people wouldn't have. And when I started, it was in fall of 2002, and it was brutal. Oh my God, it was very difficult. And it was that way for about 7 months or so. Just awful market, water torture.
So when you leave like the broker environment to do day trading, do people like coworkers, do they think you're crazy, or are they like does it seem like a natural progression? Or are they like, you're nuts, dude?
Everybody is like, what are you doing?
Yeah.
Seriously? You're the SVP for a large brokerage firm, and you're going to give the corner office up for what?
Yeah.
To go trade? You could see how many people fail. Yeah. And what are you doing here? And it was, my family, that was the same way. My wife's always been supportive, but, we had a stop of what my drawdown could be. And I was losing money, but I wasn't losing money hand over fist. It was just, we were getting ready to invade Iraq, and the tech bubble had burst in year 2000. So we still had the aftermath of that kind of selling, and the market hadn't established a low, and oh my gosh, we're going into Iraq. And so it was this tick, tick, tick lower, but it wasn't anything that you could short either, because then you'd have these snapback rallies that would just destroy you. So yeah, I was losing little bits of money consistently. And the big thing was my expenses, because I had a family of 5 that I had to support. And it was a very lonely time. I was out on an island. I couldn't talk about it. I couldn't talk to anybody about it. My friends, they knew it was a sore subject. But then when the market turned around after we invaded Iraq, I still remember George W. on the battleship. Mission accomplished like 2 weeks into the war. Well, the market rallied. That's the important thing. And when the market rallied, all the things that I had done previously actually were paying off in spades. And it was like almost fishing, shooting fish in a barrel. And so that was a turning point in terms of my profitability. But I was still in the beginning stages of my journey, when I still had lots of moving pieces to put together to devise a trading system.
And have you had to like adapt your trading system or your style of trading over the different market cycles over the last couple decades? Or is it something that kind of works in every market?
It works in every market. I think it's more a cognizance of where you're at in the cycles, and having experience dealt with different market environments and different market conditions that really kind of hones and refines what you're doing. A suggestion that I'll make to all of you, and probably 5% of you will actually do this, the serious people will. You got to write daily trade journals, and I mean be extensive about it. What was I thinking? What was happening? You know, I would write, yeah, I had these tiny bodied little candles down here, and then the market looked like it was going to go lower, and I got trapped, and why did that happen? And so if you write extensive journals, in order for you to do the writing part of it, you have to really think about what's going to make sense when you read it later, and it cements the idea. And it gives you something, and you've got to do it after the close every day. Go for a walk, do whatever, but write it down. And then at the end of the week, review every single day and what you did, and then formulate a game plan for the next week, what you did well and what you need to work on. But those journals, they take maybe half an hour, 45 minutes to write, and they're priceless.
Yeah, that's great advice. And another thing I would add to that is you could also screen record your trading every day. And you could always look back if you ever, you saw the executions, of course, that you could always load up into a journal or whatever. But it is also nice seeing the screen recording, and you maybe could have like a mic running, and you could even narrate to yourself. Okay, I'm going to do this here, and you can kind of gauge when you go back for a review, you can kind of gauge your state, your emotional state, your thought process. Because sometimes when I've looked back at my journals, if it's not detailed enough, I'm like, what was I doing? Why did I short that? That's obvious long. I'll look back and see clear, like poor trading, and I'm not entirely sure sometimes why I took it. So either like detailed journaling, or in addition, you can supplement it with like screen recording and even narrating it. And as I'm talking, we did tick new lows there on NASDAQ. That's what I want to see if we can sweep this low from 6:30 Central. And we've just done that. ES, already had swept its low, so it's continuing downwards at 51.91.
What you're doing now is actually helping you also by having to explain to other people what your rationale is. Going into the trade, you have to verbalize it, you have to think about it.
Oh yeah.
And you're teaching people. So I hope that all of you are, appreciating what Daniel does every day, because it's really hard to put your trades out there in public. So give this live event a thumbs up. How about it?
Yeah, let's hit the thumbs up button. Show Pete some love. I appreciate the kind words, Pete. It is challenging, but there is a lot of benefit to doing it. Like Pete said, when you have to explain your trading to people, like you maybe second guess some more impulsive trades you may just want to take because, you don't really have good thesis behind it or enough confluences. So doing the live stream does kind of keep me a little bit more honest there in my trading, which is why I do, one of the reasons why I do like to do it. And so, all right, we're watching here. This is a nice move. I am looking to maybe scale out of these puts here when I see a little bit of indication that buyers may like the level.
Getting that long red candle. So I'm, getting closer and closer to the setup that I'm interested in. And I do have my first buy order loaded. And I'll probably get a question, I use market orders. If I'm waiting for my setup, I'm going to use a market order for my first entry. And I expect the market to move my way almost instantly off of that entry point. So I don't want to miss it. There's certain things I'm looking for, and when I get it, I get it. As far as adding, there I might start using limit orders and retracement. But if I'm adding, I'm confident and I have confirmation in what I've been looking for and what I'm seeing, I won't hesitate to use a market order. It's, usually a tick.
Yeah, I'm on my exit. This kind of right now has a look of like that air gap you talked about in that capitulation pattern. Would you agree with that?
This is it, man. We're getting it right now. We can't. You don't want to be a buyer into that air pocket. You do have to have that long green candle after it.
I am looking.
But it's setting up, and so.
Go ahead.
I was just going to say, if you are drawing that lower trend line, you can see how we just kind of poke through the lower end of it. And yep, picking up a little steam. And this is where buyers have said, I'm done. I'm not going to buy for a while. Mm-hmm. And that's when you hit the air pocket. They step away, they wait. And then when they come in hard and they come in strong. And
this is looking good.
What you can't do right now, what's really difficult to do, is you can't buy call options like 0 DTEs, which you can do, but the volatilities are really high. The implied volatilities are super high. I'm going to step away for just a second, Dan. I'll be back in about 2 minutes. And when I come back, I hope there's a nice long green candle to follow up this red one.
Sounds good, Pete. Let's see. I just took, so I am, pretty pleased with that. I bought it for 11 and change, right? So, this is maybe the last short I took was what I said one of my best trades ever, and this is, I think, one-upping that trade. So I just want to make sure I manage it correctly. So now we are over 5% on down 5%. So please do not trade TOPSTEP, XFA, or live accounts because that is against the rules. Okay, you want to see where, I just want to ask where I entered. Thanks for the kind comment, Satchmo. Appreciate it. I bought puts March 27th at 482.50. And then you can see the red lines here are where I covered. So covered at 452.96. That was, I want to say yesterday. And then today I've done two more scale outs, 436 and 427. So just a monster trade for me. Like Pete says, like a lot of traders can make most of their money in just like a handful of trading days a year. And I feel like this is a good example of that. It's been 2 swing trades to go from a $5,800 account to over 35,000 or something. And that is being a very aggressive with my position size. So it's not something I recommend, but I was looking to push pretty hard. And I had confidence in the trades. You could trade the combine though. Yes, you can. My profit on it, it's juicy. I haven't done the math yet, but it's handsome. We might be getting this capitulation now. I might go ahead and grab or sell the rest of this position. I'm gonna try to get it sold around 49 and a half. See if I can get a generous fill here. Because so far, this is kind of like Pete drew it out, right? We got the air gap, and then maybe this could turn into a bullish hammer here. So I don't think I'm going to get the fill there. I might just mark it out of this and call it a day on that trade. Very nice. This will be my last exit. There we go. Sold at 48.61. So a little bit less, but still beautiful. Brad, I don't know why you're being hostile. You've been here for a long time. I don't appreciate that. All right, so there's the short. So 42 scaled on out. This looks like the capitulation we talked about. All right, Pete, how are you liking this?
I'm liking this. I got the setup I'm looking for. Just need some follow through, and then we are set.
Beautiful. So I exited completely out of my swings and cues there on that nice little air gap of sorts.
Brad, you stuck to your game plan. You made money. Good for you. You know, you don't have to go in your face to other people and pound your chest. The guys on the trading floor that had the loudest mouths, those are the guys that lost money long term. The guys that quietly went about their business, those are the guys that you want to watch and pay attention to. So, you know what? Act like you belong here, and you made money. Good for you. You don't have to go, oh, you missed the trade. You're an idiot. You're no good. I put my P&L against pretty much anyone. So when I'm trading, but I don't go getting in anybody's face because everybody's got to do what's right for them.
Agreed. Like I say, if you're doing well, like awesome, good job. Trading's hard, so yeah, give yourself a pat on the back, but go be a positive force in the world. Instead of being a negative one. You're doing something challenging and doing well at it, supposedly. So go spread that positivity.
Yeah, absolutely. Go start a channel and tell people how you knew that this was going lower and explain what your methodology was. Share the wealth. All for it. That's what I'm doing, and I am definitely getting ready to buy here. Need to let this candle complete, but I like what I see so far, and I need to make sure that this is not a solo.
Right.
Need to see immediate follow through. Again, we're not trading patterns that are kind of like that one. We're trading patterns that are exactly like that. And right now, this could just be a candle that they hammer right back down.
Yeah, right now it's a retest on NASDAQ of its pre-market low there. And so it will be interesting to see if we can easily reclaim that, get back above 900. I think it will start looking pretty good there to the upside.
I am actually spending a little bit of time here to see if there are any stocks that I want to buy.
Yeah, let us know if you find anything with relative strength that you like. This Pete
That's
trade.
the advantage of being able to get into a stock that you like, because you can be wrong on the market making a low here and not have your butt
Exactly.
handed to you.
Answer a couple questions in the chat. Pete trades ES more than NQ. Yes. And he trades the 5-minute chart. Those are two things we've kind of addressed early in the stream. All right. 900, next level I'm looking for on NASDAQ here. But so far, this is playing out really nicely to what we've been talking about. So that's why it's nice having that plan and knowing what you want to see. Because then when you see it, you execute. It's a lot. Whenever I draw out something that I want to see happen, I really try to make a point to actually pull the trigger on it when my analysis starts playing out like I see it. So I'd like to do that here too on the upside.
Yep, you've got to have that visual.
Mm-hmm. Can we trade the XFA if it goes back above 5%? Yeah, you can. Yeah. It's just when it's in that range of being within 2% of down 7%, then it's no trading. But as long as we get back above it, you're okay. All right. And Pete, we've been on
pretty good.
We've been on for an hour and a half. I know you want to get a trade in here, but you just let me know if we're keeping you too long, because I know you got a lot of other stuff going on as well. So feel free to let us know when you got to get head out.
Well, we're close to a trade now, so
yeah. All right.
And
let's see if we can get it.
We won't have to wait much longer.
Is Powell speaking soon? Let's see. Powell speaks 10:25 Central, so yeah, about 30 minutes. Let's see, what is he doing? Fed chair speaks at the Society for Advancing Business Editing and Writing. Okay, I'm sure it's. I can't imagine. I don't know, Pete. Are you worried about Powell speaking a half an hour? I can't imagine what he'd say that really move. I don't know. Maybe. What do you think?
I'm not overly concerned about it. I just bought some SPY calls that expire Monday.
Nice.
And I bought them at 236, and they are the April 7, 530 calls, which are way the heck out of the money. But if we do get a capitulation low and we do get a big move upward, it's going to be very fast, and these options will actually move. But I know I'm paying a lot of option implied volatility, so I didn't go big on this. But this rubber band is stretched, and you can see 525 will be an easy target for the SPY if we get that capitulation low. And then anything filling in the gap gets you to 530 very quickly. Would I hold this position over the weekend? No, but I probably would hold it through the day as the market starts to fill in some of this gap. But right now, it's just a small position. I didn't go overboard, and I need to see that bounce, and I need to see that immediate follow through. We got to get through VWAP very, very quickly. As far as trading futures, a little bit riskier. I've got finite risk with buying call options, and they're going to retain their option implied volatility pretty well for the next few hours because they're Monday options. So that's what I'm just opting for an initial position, but I'm still looking for a stock. And I am ready right here to take a position in futures, which I'm going to do. And I am in at 5208.
All right, 5208 on ES.
Yep.
Cool.
And I'm going to have another order loaded.
I like this. I like the look here on NASDAQ. I like the wick down to this pre-market low that I had marked out. I kind of want to see us get above 900 here, but it does look pretty good here to the upside.
Down, boy, down.
Yeah, something's beeping and he's excited about it. There we go. There's a really.
Oh yeah. Okay. So
really strong push through 900 here. Sorry, buddy.
All right. I'm adding to my position.
Very nice.
I know it's hard. I just added my average cost is 52.24.50.
So most people, I mean, a lot of people would look maybe to exit, and something we talked about before. A lot of the seasoned pros add where a lot of people are getting out. Something that Tom Hugard mentioned in his book Best Loser Wins is where instead of looking at when can I get out, look at when should I add, and that's kind of like, to me, the next level mindset. It's something that I still struggle with.
Yeah, you want to be adding and the other, not every day. I mean, when you get the strong moves and the big moves, like I just mentioned to you, that's when you want to be adding. Other days, you may only put one or two legs on, and then that's the extent of the move. So,
I feel like I missed my, I feel like I missed my entry, wanting to see 900 break, and we went
you
through it
got to
so
go,
hard.
man. You got to
Yeah,
go. You got to go. You saw me add right away. I'm
yeah,
like,
yeah.
I'm
That
not
was good.
dicking around here. I'm already up a point on my calls. I'm up full point. So those are currently trading 325. And I probably add to that position right now. I think I'm going to.
Terrific. Here's 18,000. All right.
Yep, added to that at 315, $3.15. And
Beautiful. And I'm going to point out this. Actually, wasn't even looking, but we did have a 1OP bullish cross right there as well, leading the way. Which
yes, we did.
Pretty nice.
Yes, we did, didn't we? Right on that freaking low.
Gotta love when that happens.
I love when that happens. So now we want to charge and we want to get back to the gap. Okay. So we're looking for confirmation, what we want to see along the way. Just where have I seen this pattern before, Dan?
Huh. Where it seems kind of familiar, but I just can't play. Oh, wait a second. Is this like something that we've been talking about all morning?
Oh, yeah. Yeah, that one. That's what it looks like.
We were talking about this in real time, which is really cool. And something, I mean, without you on the stream, I don't even know. I mean, I'd be trying to look for it, but I really love having, I mean, you're just a terrific price action reader. Like, I have the one option chat on my other monitor all day long. I'm always reading Pete's analysis. That's what I'm looking for. I kind of just scan looking for Pete's analysis because I find it very helpful. And at the end of the day, if I miss, I go back and I read what Pete was saying throughout the day. So yeah, spot on, Pete. That was freaking killer. Such a strong move off that low, which is exactly what he was looking for. So it's awesome to be able to know what to look for and then execute when you see it, and not only execute but then add to it. So that's just great. I hope chat. I hope you're making money, or at least learning, if not making money.
Yep, been doing it a long time. I held firm. I did not bite on the early move lower. I knew what I wanted to trade, how I wanted to trade it. And I just had to wait for the setup. And there are going to be days when you wait 2 or 3 hours for your setup and then you nail it. And there are going to be times when in the first 15, 20 minutes that things are setting up pretty well for you. And then you can act earlier. So what do we do now? Now we've seen that buyers are fairly aggressive, and we've seen a few long green candles on volume. We got the 1OP cross. So what do I want to see now? Now I want to see, that was a long green candle. I want to see half of it preserved. I don't mind retracing it. I don't mind going below VWAP a little bit. But then on the candle that follows this candle, I want to see us march right back to the top of that long green candle. That will confirm that buyers are still aggressive. We need that sense of urgency. We need to know that buyers feel that this is their opportunity to get long. And then we want to charge the high of the day. And if we get into the gap, I'm going to add again. And I'll wait for confirmation. Any red candle that I get along the way that gets instantly gobbled up, I'll add on that too. And I'm going to start expecting, if the move gains momentum, that we're probably going to fill the gap. So on a big reversal like this, I will make a shit ton of money, and I will have waited very patiently for my setup, and I will have added on size. So in any event, I think I might call it a day so I can get back into my chat room, and I'm seeing a number of bullish alerts come through on Crocs and on Nike.
Right.
Crocs and Nike, and I believe those are apparel stocks, so I could
Yeah.
only imagine that it's tariff-related news. And so my servers are constantly scanning stocks for heavy volume in the last 5 minutes. That's way over and above the average normal volume for that exact 5-minute interval over a 20-day period. And I'm looking for that corresponding big price move. So my suspicion is that there was some news that came out that's tariff related, because these are apparel stocks that have been impacted by tariffs and trade wars. So
Good point. Well,
let's see if
yeah.
Let's see if this move continues. That's what I'm looking for. My stops are below my entry point. I've already got a decent cushion. I want to see us stay above VWAP. I want this red candle erased. I want to charge toward the gap. If I get all of that, I'll be adding. If I don't get that, then I'm going to keep my trades properly managed, and I will exit them. That's how I'm going to trade the day. So thanks so much for having me on, Daniel. Good luck with your trading, everybody. I hope this has been very educational for you.
Pete, it's been an honor. Thank you so much for your time, your expertise. I think a lot of people really enjoyed it. And check out Pete's channel pinned at the top of the chat. So Pete, thanks again for coming on stream. It was a pleasure.
Hey, my pleasure. Thanks,
All right.
everybody.
See
Trade
ya.
well.
Bye. All right. That was Pete Stolcers from One Option. He is a legend, and you can see him. You can see his analysis play out in real time, which is what I love. And so I went ahead and got in at the 50%. 36.50. I will be right back. All right, I'm back. Can everyone hear me? All right. Sad you didn't keep Peter around for a round of geocaster. Yeah, I'm sure that'd be a massive waste of his time. All right. That was tough just with my computer being a goofball. But what happened with Nike? I don't know. I don't even have Nike chat or pulled up, but I think it has to do with Trump talking about Vietnam, maybe. So if Nike manufactures in Vietnam, it's probably something related to that. Yeah, Pete's awesome. Chat was pretty cool, but like if you're gonna be hostile towards a guest, you're being hostile towards me, right? So it's not appreciated. So chat was pretty cool for the most part, but I'm just saying, hostile towards the guest is hostility towards me as well. This is a nice trade. And again, kind of what Pete said. I knew what he was going to say before he said it, right? He wanted to see half this candle preserved. And because I pay attention to his analysis and he's helped me understand price action, that is why I wanted to. I mean, I got in there. I did not want to miss the boat, and so I waited for that pullback, and now I'm sitting pretty handsomely up in this trade. I am looking to pass both these combines here. There's two I'm trading, and this will be another 2-day pass if I can get the fill here. I would like to bring the music back on. It did spaz out the stream earlier, so that's why I didn't play it while he's on. Plus, it's maybe just easier with two people to not have music. But now that it's just me, let's fill that dead air. Okay. Did not crash out anything yet. I don't know if you guys can hear it though. Let me. Ooh, I'm too scared. I'm too scared to reset the Spotify capture. And it might freeze out OBS, so I'm not going to do that. Brad, he's not. He clearly outlined what he was looking for. He's been calling for shorts this whole time, and now he's looking for a capitulation. And we got it, and he's profiting on it. So don't be fucking rude, man. Come on, man. You've been around long enough to show me some respect at the very least. And if you can't show me respect, then maybe there's another stream for you. Okay, here we go. Pretty close to the fill. Need about I guess it's like 40 points away. So yeah, what's up, everybody? Hope you guys enjoyed that segment with Pete. That was awesome. Really helpful to have that on such a big day like that. And that was such a sick pullback. And it's exactly what Pete said he wanted to see. And I've learned a lot from Pete. That's why I enter there too. And now I'm very close to a few points away from passing 2 more combines there. So hopefully 100 does not reject too much, and I can get the fill. P trades ICT. It's funny, man. Oh man, so close to the fill. Man. I also, when Pete bought SPY calls, I did as well. I'm up 1,000 on the small account. I will say it's also it's actually very challenging to host, to monitor chat, to try to trade, to deal with tech problems. I love having Pete on, but it's exhausting just trying to do everything. You know, it'd be nice if we had like a producer. But I think it went pretty well, and I friggin' love learning from Pete. Can you buy SPY calls and puts at the same time on different accounts? Yeah, yeah, that'd be like yeah, you can do that. All right, really close to the fill. Oh, come on, push, boom. 106,000. That's another pass. That one passed too, as far as I can tell. So that was a sick trade. I felt like I missed the move, but you know, waiting. I did this before on a trend day. As like look for the 5-minute, look for a 50% retracement, and got in there. And now we're eating pretty good. I passed these 100Ks in 2 days. Like I've done it so many times. Now I'm feeling way more confident about it, and I feel like I've really gotten it down pretty good. So that's good because if you're not in the Discord, maybe you don't know. I wasn't able to keep the other two XFAs alive. They had $200 to draw down after a bad kind of tilty day. And so I am going to try one more time here to get a payout on 2 XFAs. So tomorrow not tomorrow, it's Friday. Monday they'll be active, and we'll be in business. So I'm still in these SPY calls, up a decent amount here. 36% it looks like on SPY calls. So I'm having a very good day. I feel very good about it. What else? I hope you guys are doing well. I mean, I saw some people past their combines. It's kind of hard to keep up with chat again when I don't want to interrupt Pete to say good job on passing your combines. So good job to all of you who have done well today. Liking this. Is there a benefit to the 100K in the funded? You have $3,000 of drawdown. So, the 50K is $2,000 of drawdown. So you get more drawdown. That's the main benefit. So, okay, that's that. I do have another I could trade. I do have a 50K that I have not traded yet. And now that I'm not hosting a thing where it requires a little bit more from the tech side, I can maybe launch Motiveway without it yelling at me. Motivewave. How much did you invest in the trade that you just exited? I invest. If you're talking about Shakib, I don't know if you're actually talking about the futures trade or if you're talking about the swing trade. So the futures trade, you're risking $20 a point until your stop loss, right? It's not like a shares where you spend $5,000 in shares, right? It's not like that. It's more like you have $20 a point to your stop loss. And sorry, I'm a little out of sorts here. There we go, NASDAQ. So it's a little different. That's great, Christopher. Glad to hear it. Space Ghost Viz, congrats on passing. So yeah, I have this 50K here I could trade if I like anything else. But I do feel like, man, I really had a good time on the short side from my swing, and I just got a nice trade from the long side. I kind of don't feel like forcing anything. So if something really calls to me, I will look for it. Now, let's see. As far as music goes, I'm going to have to restart the capture, which could crash OBS. I will try it. There we go. Actually worked without crashing it out, which is always a pleasure. Okay. I did close Thinkorswim after I exited my position, but I kind of want to open it back up. So we did get to VWAP on ES there, and NASDAQ, ES is right there. So still in these SPY calls. I did a Monday expiry too. And they're up. They're still up about 28%. How long have you been trading? I've been trading for 5 years now. It's been, I mean, as anyone can attest, it's very challenging. The first 2 years, I made money from these black swan events. Then the next 2 years, I struggled. Maybe next 3 years, I struggled. But now I feel like things are starting to click. I feel like I've really grown leaps and bounds, and I can watch old videos on this channel to really see that improvement over time. So it's nice having that proof of being a shitty trader, and then you can see, oh, okay, he's not as shitty as he was 2 years ago. So it's been a journey, though. It's been very. I'm sure anyone who's been around for a few years can tell you how hard it is, you know. And if you can still stick around, you know, for 4+ years, I feel like you've really outlasted almost everybody who kind of washes out. Want to find info on trading futures? Well, you're in the right place. I trade futures every day here on the live stream, and we have some great traders in chat. I usually offer pretty reasonable advice. I'm not an expert futures trader, but you're in a good spot. I like Carmine Rosado on YouTube. He's a great trader. He's more of an order flow trader, but he's fantastic. He is legit. So I stand by Carmine for sure, and he's you can learn a lot from his free videos. TOPSTEP is refunding negative trades that happened during the freeze. That's why I like TOPSTEP. They always try to make things right. I don't really worry when stuff like that happens because I feel like they're going to do the right thing. Vincent's awesome. Yeah, Vincent is an options trader, and he's a beast. I've been watching him for years, where he'll make $300 a day, $400 a day. Now, fast track now, he's making $15,000. Or I just watched him scale up over the years, and it's just been a very natural progression, and he's just been crushing it. Alexander, the 2% rule we've talked about ad nauseum at this point. Look at the percent change on your instrument. So right here it says negative 3.2%. When it gets to negative 5%, stop trading. Don't trade if you're in the TOPSTEP XFA or live. Have you seen Matt Diamond going in on futures and props? Yeah, I did see him. I saw like maybe 1 or 2 videos from him. I've watched his videos before when he was like an options scalper. And so it is interesting to see him take a dive at the futures market. All right, let's give Eddie, one of our faithful mods in chat. Let's help him out here. Leave a 5-star review on TOPSTEP on Trustpilot, and shout out the Discord ambassador Eddie. All right, Eddie is applying for a few jobs at TOPSTEP, and it would help him out. So let's all do that because Eddie is always around in chat, and he always has the answer for TOPSTEP stuff. And I really appreciate it. So let's all help Eddie out. Let me find a link. And be honest, you know, like you don't have to, you know, just be honest about it. If you have a positive thing to say about TOPSTEP, let's show Eddie some love. I will link it. So please mention Discord ambassador Eddie. All right. So up to VWAP and then kind of slowed down a little bit. 15 minutes, still looking all right. We have a nice bullish hammer off the 15. I guess I'm going to look for about half of this 15-minute candle to hold here. So around 72, 74. Biggest difference you notice now is in your price action analysis now from before. I think I have incorporated previous days high and low a little bit more into my analysis. I have implemented 50% retracements into my analysis. And then just kind of with time, you know, like this short I made the other day is from last Wednesday is about looking for like the less obvious play where a lot of times I would take a short. Instead, I was looking for actually a fake out to the short side and the long. And a lot of that is just like kind of comes with a little bit of time, you know, you start to learn like that, okay, maybe it's not going to be so simple as just a break and retest. Like there might be actually more at play. So being able to differentiate when things don't look so good. Leaving a review, Eddie. Hang on. So halfway, kind of holding right now. Let's see if that sticks. All right, Eddie. Left you a review. It's pending. Thanks, Eddie. So I put your name in the title, so they'll be like, what? Who's Eddie? Hopefully I don't think of the Eddie guy who's on TOPSTEP TV. Huh, okay. Not quite the buy up I wanted here. Powell speaking. Market's so crazy right now. What have you done to adjust? I haven't done a whole lot. Sizing down is usually a good idea in this kind of volatility. Should have some pull with Patak, work your magic. You'd be surprised how little pull I have, dude. You'd be surprised. I don't think they care too much about me and my opinions. So looking at a 30-minute chart here, I don't love that upper wick here for more upside. I'd like to see a little bit more excitement out of the buyers here. But it could be because Powell's flapping his gums. All right, it's 10:30. I'm still in SPY calls. Papa Powell, I heard my name. Bro, you're in a live you're in a live event right now. You shouldn't be looking at your phone, Powell. Come on, stay focused. Imagine Powell's like, let me get these options in real quick before I say what I need to say. Yeah, Pete exited his ES trade. He's still in the SPY calls. All right, guys. What else? I mean, What are we doing here? Imagine Powell saying something like really market favorable news. Then he goes on his phone, exits his calls, and then goes, however. He's just like a degen playing 0 DTEs. Oh, man. All right, we're coming into IPL here. This is initial balance low. Is that a 50% retracement of the move? Oh, let me, honestly, I love 50% retracements. Yeah, ES right at its 50% there. Yeah, it's still a touch above it. Trade the full session? No, I don't. I usually wind things down around 10:30 Central Time. That tends to be my sweet spot. Yo, did they film this on like a security camera or something? Why does it look like shit? This literally looks like the worst video quality I've ever seen. Yeah, they clearly haven't watched enough Mango Street videos. I know. Wait, the contrast is that of it's worse than a doorbell camera. I don't really want to listen to him talk. And so I find it too boring. I just care what price does. Record with a Nintendo DS or like a Game Boy camera. Remember those? If you're old enough. Whew. All right, guys. I'm pretty worn out. I'm pretty worn out. Don't see any trades at the moment that I want to take. Let's have a little fun. We're gonna play a little geography game here. If you don't normally watch the stream, sorry. There's no trades I want to take right now, and it's Friday. We're gonna try to guess what random country is the the one for today. But I appreciate everyone joining the stream. Hope you had a good time. So thank you. Start with Poland. Not bad, I guess. 3,500 miles from Poland is where we need to be. 5,600 kilometers. Yeah, I made a massive bag. I'm worn out. Honestly, it is kind of tiring doing everything. 1,300 miles from South Africa. So we're in Africa. I do live trading every day. Yeah, Monday through Friday. The first two and a half hours usually, from 8:20 to usually 10:30 or 11 Central Time. Oh, I exited my puts, Grizz. So I think I made over 30K on that. Maybe it was less than 30K. Let me think. I think I made, no, like 20, maybe 20K. I had to pull up Thinkorswim. I made like 20. I put $8,800 into it, and I made a pretty good amount. Got my account over PDT, which was what my main big goal was. I didn't think I was gonna be able to do it in 2 trades, you know, but. Thank you, thank you. It's Rwanda. Rake, you got it right. You said it has to be Rwanda. Good job. Would you walk if you're in the money today? Yeah. I mean, what do you mean? Like, if you're green on the day, would you walk away? Yeah. Why is PAL not pumping the market? All right, now we need a world capital. So country capital is what we're looking for. You've done futures from the start. Options can be good in the right environment and everything. They can be very tricky and they can be very frustrating. Sometimes you can get poor fills. Sometimes when you want to get out, it's kind of blown by where you normally want to stop out. You can't really do hard stops with options because of the price, the nature of their pricing. So unlike futures, where futures it's a lot easier to have like your managed risk with your hard stops and everything. You can't do bracket orders on options really. So it does make it a little trickier in that regard. But of course you have, hundreds of options, pun intended, of what you could trade as opposed to just trading, futures instruments. We're 3,900 miles from New Delhi, 6,300 kilometers. $900 miles from Algiers. $700 miles from Sarajevo. $370 miles from Prague. Warsaw, maybe? Prague is still the closest one. About like Switzerland. 190 miles from Switzerland. you made $150 extra on your 50K combine. Yeah, if it's the last day of your if you hit your target today, you should be okay. I think. If it's like you're not, you still haven't passed the combine, then you're gonna have to make extra money. Yeah, I guess Vaduz, Liechtenstein's capital, wasn't it? I don't think it's Vienna. $190 miles from Switzerland. Luxembourg? Yeah, Luxembourg. All right, that was fun. Okay. I'm gonna head out of here soon. Let's just do one round of time guesser. Let's see if we can. I would like to break 44K. 44,000 points is what I want. St. Louis Times. St. Louis, and we get a year somewhere. I'm sure there's a year on the newspaper. We just can't read it. What year do you guys think this photo's from? I kind of like the long side here, back above 900, back above IBL. I don't love the 30-minute chart. Yeah, I don't know. I'm a little tempted to try the long. I'll give it a go here. See if I can make a little bag. See a bunch of kids smoking pipes and cigarettes. It's hilarious. Little Victorian kids. Let's go 1918. 1910. Pretty good. Might get the stop here. Yeah, stopped out. Is that Russia? A Russian astronaut? In quarantine, looks like. Do you think we're in Russia? I don't know if we're in Moscow or just, you know, maybe that's just a kind of misleading a little bit. Where's like an airport or something? Ah, nice wick lower and then back up. Screwing me out, screwing me around there. 2019. It was 2018. Oh, we weren't in Russia. It was Kazakhstan. Very nice. Excuse me. Okay. This kind of looks like a movie set. But I could be wrong. I think it might be a movie set here. Or it could be a real disaster, but it looks a little too staged. That's probably a famous. That's not Paul Newman. Who is that? It's probably a famous actor. Unless I'm completely wrong on this idea of it being a movie set. Doesn't that look like an actor? Like someone who'd be famous? Let's just go Hollywood, you know? Could be like Burbank. We got studios up in Burbank. We got, was it? Warner Brothers or something up there, I think. I'm gonna do Burbank, I think. Oh wait, no, it's by the airport, I think. Where's the studio over there? That was right by the airport. Somewhere over there. We'll go, I don't know. 1960. Okay, it was a movie. Oh, it was Universal. And it was 1974. So there's this trade I wanted. Stopped out on that little volatility there. Needs a little bit more breathing room, I suppose. I'm gonna try one more time here. See if I can just catch the move. Max loss got me. All right, that was too large a size for these kind of moves. So we'll call it down that one. Sniper at work. We got Forest Drive. Newry. The driver is on the... What side is she on? The left? Kind of looks like she's on the left, right? Hard to say. She could be on the right side, actually. Kind of seems like the UK to me. What do you guys think? Any thoughts? Sniper at work. The sign says Newry, Newry. Yeah, I'm thinking England. There's Newbury. It's different. Excuse me. UK 95. Sounds good to me. I have no idea if there's like a military base or something around Newry. I'll go over here. I don't know. Try 95. '94, and we're in Ireland. North Ireland, right? Ireland. North Ireland. Is that the border? North Ireland. Not bad. This looks like Paris or something. Is this a legit duel? The guy's wearing a mask. You made 3,600 on your 50K combine. Why would you do that? Dude, you need to lose some money today, my friend. I'm serious. You should only make 1,500. So your profit target's going to go up by essentially the next, essentially you're going to have to make $3,600 if you don't lose money today. In another day, you're going to have to make $3,600. So there's a camera. I think they're filming something. I think this is Paris. And, I mean, judging by their outfits, it's really old. I'm going to go like 1918. 1909, and we were in New York. New York City? That did not look like New York City to me. Okay. I screwed that one up. It was terrible. Guys, it was fun stream today. I hope you made some money or at the very least learned something from Pete. Thanks for tuning in this week. I'll see you guys next week for a Monday stream. Have a great weekend. Take care. Later.